this week I took a couple of trades, and I am going to show you the trades that I took, why I took them, whether they were high quality or not, and later in the video we will talk about the funding challenge. And if you're new to the channel, subscribe. Let's jump into the video. Alright, so the first trade of the week was EURUSD, and as you can see, we have our signal was a first trade day at the low of the week, and then the setup I was looking for was a pump and dump setups. Now, the level that I wanted to take the trade in was the low of the session or the low of the day. And then the price action that I was seeing, it was trapped traders at the low, and then entry was half of that. So let us look at EURUSD and see, okay, what really happened on Monday, because that was on Monday. So as usual, so I was looking at Wednesday, Thursday, Friday, and if I'm looking at Wednesday, Thursday, Friday, the reset, we have this first trade day at the low of the week. So first trade day on Friday. So when I was looking at price action on Monday, I have my low of the day, which is also the low of the week, and high of the day in place. So I'm looking at price action on the 15-minute time frame. What is price action doing? So price came down, broke the low of the day, broke down, and then we had this big move. So when I go to the 5-minute time frame, this is what I see. I see price action. So we had this move down, and then price started slowing down, and then this move from 8:30, this move has engulfed all these traders. So all these people are underwater. If you were selling here, you are underwater. That was what was going in my mind. So when I see that, I put up that small indicator there. It is just the Fibonacci. I'm just looking at an area, the area where is roughly half of this distance, so that I see price comes back to that level for my entry. So when I go to the 1-minute time frame, you can see that this move, this is the move that engulfed all those people. So at 9:30, price comes back down to that half level. So I'm looking at that half level, and then I'm looking for a W pattern with a break of structure engulfed. So we did not have, yes, so we have this nice W pattern, still not engulfed, but I took the entry somewhere around here. My stops were below this area. Now I'll show you exactly where the best entry is, and it's after, yes, so after this break of structure here. So my entry would have been on that level, stops at this level. But since I'm showing you what my entry was, that was my entry, and I was targeting the high of the day, a risk reward ratio of 1:3, and you can see price did hit 1:3. It did not reach the high of the day, but a 1:3 risk reward ratio was hit. So yeah, moving on to the next trade, which was on the same day. It was the USDCAD, but on the opposite end. So USDCAD, if we look at the USDCAD on Friday last week, so Friday last week, we had price breaking out. So if we look at the whole week, this was the high of the week here. We had this breakout of the high of the week and price closed back inside. So we had two confluences, and if you can see, we have a failed breakout plus a fast trade day at the high of the month, high of the week. So once I see this, the next day, obviously I was looking for an opportunity to go short, and I have my high and my low and high of day there. And then as you can see, we had this pump, price went down, and then we had this another with this pump. So we have one push, two push. So we have this pump, and then at 9, if we go to the 5-minute time frame, we see prices going up. I want to see traders trapped in, and we had this. If we go to now to the 1-minute time frame, so we have all these people who are selling up here. Once we had this breaking structure at 9:30, all these people were now underwater if you were trying to buy high. So once I saw that, I was looking for a 50% retracement of this area, so somewhere around here. Once I saw that we had that M pattern, this was the entry. That stops above that area, risk reward ratio of 1:3. But basically we are targeting the low of the session, the low of the day, and as you can see, price did hit our TP. So those were the trades on Monday. And then coming to the screen on Tuesday. So on Tuesday, we are on the 14th. On Tuesday, we were looking at Euro Pound in the London session. It was a London scalp. So, and on the Euro Pound, this was a very interesting thing that happened on Tuesday. So it was in the London session. So if we look at Tuesday, we had, or on Friday, how price closed. Price closed higher out of the range. So when Monday, price continued low and closed as a fast trade day, I was looking for an opportunity to go short, but at the back of my mind, I also know that I prefer having a failed breakout than a fast trade day. So anyway, price action came back to the low of the day, and as I was looking at the 1-minute time frame in that London window, I saw price come down, and then we had a slight consolidation and then an explosive move up. So that told me that prices, people were selling lower, and then boom, we have hit into them. So I just drew up my high of session, because I knew, okay, if we've already triggered all these people and they are underwater, if price comes back to give us a retest, then I might be targeting the high of the session for a potential move down. So it was just a session scalp. Our risk reward ratio of 1:2, and I was waiting for an M pattern to be broken. Once this candle at 3 a.m. got broke out of the level. My stops were below that level, looking for a 1 to 2. So I would be watching price action as it reached this level, and you can see price did in fact play around at that level, and then eventually it broke out and continued even higher to the other side of the high of the day. So that was another win. Now, is this a trade setup that I would take? Well, right now I am in a phase where I am flexible in terms of anything can happen in the market. So you might be looking for a fast trade day, but in reality it's not a fast trade day to the market makers, but just a retracement of an initial uptrend. So I'm keeping that in mind. I'm still learning how to be flexible, but this was a trade setup that if I see again, I might take. You know, the more you trade, the more you learn. Anyway, moving on to the next setup was on Wednesday. On Wednesday, we were looking at the pound Aussie. And the pound Aussie broke down. So I was looking at a situation where we have a fast trade day. So let's look at it right now on Wednesday. Alright, so if we look at the pound Aussie, this was a good setup because we have Monday setting the opening range, Tuesday initial balance broke out, failed breakout, but also closed as a fast trade day. So I was looking for a potential move to either go back to the low of, because we already broke out of the low of the new week, potentially the low of Thursday or Wednesday. So when I came to the screen at 9, so let's look, it's 2:30, so let's wait for, yes, in the New York session, price had started breaking down. So remember, this is a broken down market. Now, I was torn apart looking at, okay, is this a reversal? Is this a dump and pump setup forming? But this is a broken down market. I don't want to be counter trending a strongly moving market. So what did I do? The first hour, price created the high of the session. So remember, my bias is sell. And then we had this pump from below at 8:30. So I was looking for pump and dump setup in the 1 minute time frame. And once we broke this level, so all these people now are underwater. So I'm looking for a retracement to give me a W pattern. So once price came back to half, so this was not the half, gave us a half and an M pattern. This was my entry. Stops above that level. Actually, it was about 15 pips. Then a risk-reward ratio of 1:3. And yeah, price blew through that move. Risk-reward ratio of 1:3 gave us a nice setup on Wednesday. Moving on to the next trade was on Thursday. On Thursday, I took 2 trades: pound, the GBPUSD, and on Thursday we were looking at So this was Thursday. We had a first trade day on Wednesday. So on Thursday I was looking for an opportunity to sell. Now if we go to 9:30, now if you look at price action, everything was going nice. So we have price coming back to the high of the day in the first hour, gives us a new high of the session. And then people who are selling this level, so from around here, all these people who are buying, they are underwater. Now, so I was waiting for price action to give me to come back to the half of this area. So let's use this whole move, because it's a whole move going down. So I want to see price coming back to that level, and price did come back, gave us an M pattern. After the break of that M pattern, I was in 15 pips for 1 to 3, but price continued higher back to the high of the session. And then if we look at price action, all these people now are underwater. So once we have people underwater, so I did not take any other trade, but I want to show you how the everything happened. So yeah, price did come back to this level, half of this move. So the retracement, looking for that break. If you took the short here, stops above that level, I believe you got the move. Yeah, anyway, got stopped out, okay, and it was the same scenario on USDJPY. Lastly, we had yesterday, we were looking at a situation where we had a first green day on the USDCAD, and then we were looking for an opportunity to buy. So if we look at the USDCAD, we had price consolidating, and then we had this first green day. So when price did come back to the level, so at 9:30 we had price coming back to the low of the day, continued lower, giving us a nice dump setup. So what I was waiting for actually was price to come back to the low of the session. So the low of the session was set in the first hour. Price did come back to that level, and then I wanted to see traders trapped. And we got the trap. People, all these people who are selling got trapped. So I was waiting for price to come back to half of that level, which actually gave us a nice W pattern here. I jumped the gun, took the trade here, and then as you can see, got stopped out. But I got out with a small loss. Once the price started moving down aggressively, it was halfway there, so I took out half of the position. I mean the whole position, but it had just moved half, so around 7 pips. And then I waited for another W pattern to be broken, and yes, once they broke, where did I take in the second? Oh yes, I took in the second position somewhere around here. Now It was also a jumped gun because we did not have any break of structure, so that was my bad. But the real trade occurred when they broke structure at that level. So around this pin, this candle here was the entry, stops below that level, and then your risk reward ratio 1 to 2, 1 to 3, and yeah, I don't know if price did hit TP. Oh, seems like it did hit take profit. But basically speaking, this was a good trade. It was a good week. Can't complain. Now, so halfway through the week, I thought to myself, if I'm a good trader, then I should take a prop firm challenge to actually test my skills. So I bought a small challenge. It's a $6,000 account, and if we look at the history, you can see I took how many trades? 1, 2, 3, 4, 5 trades, and these 2 trades I took them on the USDCAD, as you can see. The last one on Friday, and then these 2 were the 2 trades, the 2 losers on Thursday, and this was the big winner on Wednesday. So roughly I closed with break even. I'll call it break even. So using this strategy, I'm giving myself a 50% win rate, which means that in order for me to pass the challenge, if I take 20 trades, then that means I will be up 10%, and that's the one thing that they need, 10% to pass. So I will be posting the progress of the account as we continue, so stick around. We'll see how long it will take for me to actually pass that challenge, and basically that's it. If you got value from today's video, subscribe, watch this video to learn more about the strategy, and I will see you in the next video. Peace out.